Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Tuesday, August 30th, 6:46 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Futures got a little rally underway, up about 1% on equities. Oil's off 2%, but it had a big day yesterday. Nat gas off 1%. Copper off 1.5%, excuse me. Over on macro, we got the Case-Shiller Home Price Index. We've got JOLTS. And then on the earnings front, we've got, before the bell, we've got Best Buy, Baidu, and Big Lots, among a few others. After the bell, CrowdStrike. That'll be closely watched in the cybersecurity space. ChargePoint, Chewy, HP, and Ambarella. A few other ones after the bell as well. What I'm going to do this morning is run through our standard list of indexes and mega cap tech, and then I want to jump into just a few charts that we've been interested in the last week or so. Nothing really happening with the dollar. Still waiting here at 109 to see if we're going to get a breakout or a pullback to trend. Just remember, higher dollar usually means tighter financial conditions, and obviously lower dollar a little bit easier. I'd be watching these your indicators here. Notice the bearish divergence. We've got a high here and a high here, but second high at much lower momentum. So if the dollar's going to do something, I think it needs to do it rather quickly. You get this PPO starting to roll over here, get a bear cross, then you've got a recipe for at least a pullback. I won't say a big down move. Maybe come at least back to this trend line and possibly even back to this 105 level, where you can see there's a lot of support along 105. Resistance, support. So 105 is a big level to hold on any pullback. But I mean, the chart is bullish, no doubt about that. It's just whether is now the time it's going to break out, or does it have to pull back and do a little consolidation first. TLT, indecisive here, kind of wrestling with 113 as a more or less a pivot level right at the bottom of value. So it's going to be important for TLT. If it's going to move higher to fill this gap, then that would be supportive of stocks. Why? Because that means rates would be falling, and of course the inverse is true. A move down in TLT means rates are rising, usually a headwind for stocks, especially your tech and high valuation stocks. So TLT is certainly in the spotlight. VIX made another move higher. Now we're in the midpoint between resistance up here at 29 to 30 and support at 25. If we've got a 1% rally today, so I'd expect if that holds, you may get a pullback back towards 25. I think anything below 25 would be on the margin bullish. If it holds, I think we're still in this higher volatility regime. And you can look back here, 25 was good support, and I don't think there was any instance where once you cross 25 that it rolled over and went lower. Let's look. Here here we broke 25 and went to 36. I guess here was an example. We went above, but then we dropped below. Here we went higher. Here we went higher. Here we went to 36. Here we went to 36. So I would imagine that I don't want to call 36, but I think, making a run into 29.30 would definitely, I would favor that over, okay, that's it. Now we're going to have a big bull run and pull back in volatility. I think we're going to see higher before we see, a lot lower. So let's keep an eye on that. Little rally in Bitcoin this morning. This bear flag really didn't play out the way I thought it was going to. I thought we were going to, first leg down, bear flag, second leg down. It's found a little support right in this 20,000 area. If you're trading it, I still think I favor a tag of 19,000 before I would favor a breakout above 22,000. Oil, big day yesterday, 4%. Broke cleanly above the 200 here and got stopped at the 50. So we're down about 1% today. No big deal. I think as long as it holds the 200 here at, let's call it 94.65, that 95 area, I think oil's on an upward trajectory. Oscillators down at the bottom of the range, minus 60. So just from that standpoint, we're extended to the downside. Can we go lower? Sure. But we may see a little bit of a relief rally, a bounce in the oscillators before we see the next move down. Here's the NASDAQ. You can see again, minus 55. I don't think this is a place where you're loaded to the gills with shorts just because of the positioning of the oscillators. I would be ready for a little, relief rally and then a move down after that. You can see yesterday, not a lot of movement. Down here with this doji bar, we opened low. We had a rally to fill the gap. Then we came back down and pretty much closed where we opened. Whenever you see that type of a candle, it usually marks indecision. Neither the bulls nor the bears could really, make much hay on the day, as it were. And so there's indecision here at the bottom. Now, as we've discussed, on any rally, you've got the 50 above, the 50 EMA coming in at 407.34. That is going to be an important level for potential resistance. If we look here, mark your, I've tried to do that here around 407 as where the 50 comes in. And that lines up really well with the top of this little value range. You can see it here. And then if price is able to get above the 50, let's call it 407, then I think there's a good chance you could get a rally into 410. But as we've discussed before, all this area between 410 and 415 that we had worked so hard to take out as resistance, then it became support, but then it broke. So now it's back to resistance. So I would think that on any rally, getting through this zone is going to be really, really tough. Now, what you may notice here in black is yesterday I was just messing around with, the structure, starting to see that classic bear flag type structure. First impulsive leg down, consolidation rally, and then second leg down measured move. So what I've done here is just, pencil that in. Last night towards the close, it looked like, okay, we spent a day consolidating and then that bear flag broke. I was kind of thinking, okay, that's it, take it down overnight. Obviously, that didn't happen. So when you've got, when you picture in your mind's eye a structure like this, what I'm thinking this morning is, what would invalidate it? What would make this a big X mark? Well, if we're going to open up 1%, just remember that means that there's going to be a gap below. Do they, open with a gap and keep going? If that were the case, this structure would not look the same anymore. It wouldn't look really like a classic bear flag. It would look like, a kickback rally, possibly that would all, go into 410, 412, something like that. Now, if, we open around 407 and they immediately fill the gap back down to last night's close, then hey, and they keep going, then that would be kind of like a green light for a second leg down. So you'll see in the following slides, I've done that on some of the other indexes and charts. So if you want to, depending on how aggressive you wanted to get on a short, you could, alarm something like 404, 403, on a breakdown of this flag. Or if you wanted to be relatively conservative about it, alarm the prior low here just below 402. And then, if you take out the prior low, there's no doubt, and notice the void in the chart back here. Not going to be a lot of support until we get down towards this lower gap. Same thing on the Qs. We got this little support area and uptrend line right here at 305. That's where it stopped. So I think it's pretty clear that's your pivot for today. And you've got the 50-day coming right in at 311. So I think that is your overhead resistance. We've got this big bar here between 310 and 305. And then we've got the 50-day right above at 311. I would expect that to cap any kind of little rally here this morning. But if not, then the door's open for a back test of this breakdown towards 317.50. And here again, I've got that, I'll call it hypothetical bear flag breakdown, impulsive leg down, consolidation rally, and then break of the bear flag, and then move down to fill this gap and come down here. So we'll have to see if that plays out. Notice though that we said that the 50-day comes in at 307. Notice that above that area, pretty good gap in the chart here before we get up to some real resistance at 312. So if some kind of relief rally is sparked, that might be a good place to get long especially if there was a gap up in the morning that didn't pull back and you saw that the 50 was getting taken out, then you can get long against the 50 with an eye on 312, and then you've got a really good line to shoot against on the long side. And who knows, you might get a little move up to the trend line at 314, and then that would give you a real nice $7-8 move to the upside. IWM looks just like the other ones. Notice that the 50 EMA in green contained the pullback yesterday. So now we've got that acting as support here at 187. If there's a rally off that, you're going to get some resistance here with this downtrend line. And then, of course, we've got resistance. You can see the 20 and the 8-day right here at 192. And there's a lot of traffic at 190. This was from the other day where this drop had been contained and then there was a rally, but then we cut right through it again. And here again, I've got the bear flag breakdown. You probably want to have an alarm at 187, I would say. You break this high volume bar here and break the prior low, I can almost guarantee you that you're going to at least come to this uptrend line. And I would actually be betting that you come back here to 181, where again, you've got a large support area at 181. And it's really interesting. You'll see this time and time again in your chart work where you'll do, a measured move and it points right to a big support area. You'll see that a lot where, there's really no coincidences, in the chart, I don't think. So here it's pointing to another well-defined area on the chart. Meta, I think your pivot here is, 161-ish. You've got a big support level, as we've been talking about, with our target down towards 155. And you've got some overhead resistance here at 163. So right now, there may be a rally, but I'd probably be looking to fade that if it got up into 165. You've got a pretty good line of resistance there. You had it fail here, it broke out, but then came right back. So 165 is going to be an important level on any kind of a kickback on Meta. Apple here again is that impulsive move down, bear flag. I think it's got to come up above 162.5. You've got a little dollar gap in there. I think you could potentially see a rally up into 164 and potentially up to 165. But, short of that, if this bear flag breaks, you've got a big gap to fill. And then down below, you can see where that measured move would point down towards 155 on a break lower. And I would certainly, even if you're a bull, which is fine, mark the top of that gap at like 159.25. You certainly want to be, you don't want to be long, but you probably want to be short for that $3 or $2.50 gap fill down to 157. And I think probably at that point, you're going to come down to 155. So I think it's fine to play for a relief rally here if that's, kind of what you want to do, or this gap fill. But the chart is definitely leaning bearish regime, but oversold on the hourly RSI. And you can see that the PPO is now in the bearish regime. Tesla did a nice job yesterday, actually. Threatened to break this 280. Spent, you can see, like 3-4 hours down here around that 280 mark and managed to rally. But it rallied right into resistance along this line at 287.50 and kind of faltered there. So I think this morning, this 287.50 is your pivot point. I think you want to be short below 280, and if you get a rally above 287.50, you can take it long. May see 295, something like that. Microsoft, one of the weaker ones, really. Yesterday, it really just oscillated between 264 and 266. Really didn't do anything at all. You can see, the impulsive move down. This more or less a flat flag. If you were to break 264, I think you want to be short there for a move to test the top of this gap. And then you can see pretty good size gap there, $7. So I would expect that to hold and bounce on the first try. You've got a uptrend line acting as support as well, but you get a move into 250, 258 inside the gap and inside or below this trend line. I think that thing is going to fill. Amazon down in this big $10 gap, flirted with 129, but held the line. And I looked pre-market, and we are back at 132. So just remember from your TA studies, breakdown, back test into resistance, high likelihood of a fail, right? Breakdown, back test, fail. A, B, C. Now, if you get a break above 132 and it looks like it's going to hold, you can be long there for a potential run up to 134, depending on how you want to play it. I think a bigger opportunity would be if you got a break above 134.25, something like that. Then you got a lot of room to run up to 138. So this 132, 132.50 is going to be, an important area of resistance there on Amazon. Google, just like all the others, impulsive move down. Bear flag started to break down. I'm sure that's up, 1% like everything else. I think you've got some resistance here at 111. And above that, you've got more resistance at 112. So you'll have to, kind of use these levels. If you want to be long, just ratchet up your stops if a rally progresses. And keep in mind, you got a big gap below at 108. I think the only line that matters on Netflix is 222.50 right here. As long as this holds, the bulls can survive, but you get a break below 222.5. You open up this $10 air pocket down to the next level at 212.50. I wouldn't mess with a short unless you got that trigger, unless you got a big kickback rally and you wanted to get short against this trend line or against this gap. But as long as it's oscillating in here, you can really tell that price knows that 222.50 is important. Look, I mean, back here, look at all the traffic. Here, bears had a chance to break it. They couldn't do it. Rally failed. Bears have not been able to break it in here. So, I mean, that is a massive line on Netflix, and price knows it. So, I would definitely have that alarmed, even if don't consider yourself a big Netflix trader. I think that's going to be a nice opportunity when and if 222.50 ever does break. SMH was really weak yesterday, down almost 2%. I think AMD was down like 3%. We've got, NVIDIA's been weak. A lot of the big guys have been weak. So I've got 218.50 marked on my chart as a place to short on a breakdown. This gap here has obviously filled, but there'll be some muscle memory around 222. So, and I looked this morning, no 1% bounce on semis. So, these remain weak, and you've got a $3 gap down below at 216.38 to, have on your radar if you're thinking short side on SMH. Want to move on to some other charts that we've had in the crosshairs. We got long uranium. Had a good day yesterday, up 7%. I forget the strike we're at. I think we're in the 22s for September. What I've marked here is a potential area of interest. I noticed that uranium was up this morning, and the reason I flagged this 24 is you can see that is the where there's the top of the high volume over price range. And what I was thinking is, you get a breakout above 24, your next target would be up towards 25.50, where your next high volume over price bar is. But what you might want to do, if you get the breakout above 24, you let the day play out. What you might want to do is, roll and protect it, roll up to a higher strike, either up to a 24, or go slightly out of the money at a 25 or even a 26 out in October. Give it more time to play out and book profits from down here. We still got 3 weeks till expiration, third week of September. If you're inclined to let it ride, that's fine. But usually I like to, kind of book profits as I go. That way, on any pullback, it doesn't hurt quite as bad. I had mentioned the cannabis multi-state operator, U.S. multi-state operator ETF on Thursday. Down here at this 1325 type area. It was up 4.5% yesterday and breaking above this resistance area. And I think, this has a chance to move up now into the mid to upper 14s. And potentially up to downtrend resistance at 16. So, I'm not, I don't follow cannabis really closely. I know there has been, you know, um, a little life put back in the charts. You can see that, just 2 months ago we were down here at 10, and now we're here at 13. 30% in 2 months ain't all bad. So even though it looks like this thing is still in the weeds, it kind of is. You're well below the 200, well below trend. But on the bright side, you're taking out a key level of resistance, and you've recaptured the 8, 20, and 50-day moving averages, which is always a good thing if you're a bull. So if you've got some discretionary funds, or you're willing to, have a kind of a speculative trade, you can go one of two ways. You can, just get some common and not worry about, expiration and all that stuff, and just, see where this thing can go. Or you can take a cheap shot and, get a $15 call, 90 days out, and see if it can get there. So, or you can go, the other way and, get like a $13 call and see if you get a fast move. So anyways, I think cannabis is getting a little bit more interesting. And from a technical standpoint, you can't deny the fact that, at least on this chart, breaking into a new range, recapturing all the fast moving averages, RSI breaking above 50, PPO breaking above 0, and this thing has been below 0 for a year, literally. So that's something new and different to the upside. So might be something to pay attention to. GLOP, this marine shipper, I remain intrigued with this massive void above on the weekly chart that goes from, let's just call it 7 to 12.5. That would be a massive move. I've got 7 alarmed on my chart. I think we gave that a try back here, and it was fake, and it came back. I remember losing some money on that and being kind of frustrated with that, but that's why they call it trading. So this may be the second time's the charm here at 7 and break that thing free. Some of us are in coal, BTU. No coincidence that this got stopped here at 28.50. You got prior resistance here. You've got the top end of value here. So we pulled back to the 8-day. I think we are in September 27 calls. We had gotten in, down here and then rolled up again. We had a chance to do something here, but if you did, congratulations. If you didn't, you're sitting here with me with price back at 27. You got to kind of have that hold. If it loses the 8-day, it's probably going to pull back to the 20, which wouldn't be too much of a surprise. But if you see a down move losing the 8-day, probably discretion's the better part of valor. Just exit your position and then possibly re-enter on a pullback to this support. You notice resistance, 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 resistance. So the 20-day will be support back here at, let's just call it 25. If you got that pullback, that would be a nice entry. And then corn got long yesterday. I didn't look this morning, but making a move here. with a target up towards 28.50, where you've got a high volume over price bar, and then you've got a big value range here that runs from 28.50 up to 30. I would be, I'm in October 27. So if this got up here, no matter when it is, I'd probably be taking it off, book some profits into 28.50 and then use that as a new pivot point. Because if it breaks 28.50, remember, breaking back into an old range from below, your target will be 30, and then you can get long again at 28.50. But good chance of at least a reaction at 28.50 if we're lucky enough or good enough to have price run up there. So let's wrap it up here. If you're new to the channel, thanks for spending some time. If you appreciate technical analysis and having a morning game plan, hit the subscribe button, the alarm bell. More of where that came from in the days ahead. You'll also find in the show notes a link to the blog site where you can add your email address, and that way, morning, noon, or night, if I ever publish anything, you'll get it right in your email box. Let's watch the opening gap this morning. Let's see if they gap and go on a rally, or gap and then flash fill it lower out of the gate. Those are always tricky openings, and if you're not sure, just have your levels where you want to engage the stock. And usually when there's a gap open, I like to give it 2 or 3 bars, just so I don't get trapped in a fast whipsaw. You got all day, and if they're going to gap and go, there'll be a place where you can get long against a well-defined level versus that first fake bar, and you're all excited, you jump in, and then they rip it the other way, and then you're trapped. So be careful on those openings, especially when you got a gap either above or below price. It's always really, really tricky. So let's leave it there. This has been Chris Buss with Traders Profit Compass. Have a good day of trading. Talk to you next time.